Hello everyone and welcome back to a new video on the channel. This video is going to be a bit different. I am going to be going over the dividend tracker, and this is basically a portfolio tracker to see how you're doing in terms of dividends, in terms of your investment portfolio and all that good stuff. So in this video, I am going to be going over my account where we're currently sat at in terms of my stocks, and I am going to go over my goals and all that good stuff regarding dividends and just my accounts in general, right? But before we get into it, if you could please hit the like button, drop a subscription down below and turn the notifications to all so you don't miss a future stock market video. I'm doing multiple stock market videos a week at the market, at the moment, not at the market, regarding my ISA, my individual savings account, my stocks and shares ISA. I'm based in the UK here. My dividend portfolio and my other portfolios. So I have a few portfolios. Main one being my ISA account, which I deposit the maximum 20k a year in. I have my general investing account, which I mainly invest for dividends in. I'm trying to get to a point where, at some point in my life within the next 20 years or so, I can start purely living off of dividends. And then also I have another portfolio, which is 10% of my overall stock portfolio that is basically put into different tech growth stocks, okay, for the long term. It's only 10% of my portfolio. That I'm setting up right now. I don't actually have that live, but I'm currently moving funds over there to get that set up. And also I do have a Vanguard account and a Fidelity account and a Hargreaves Lansdown account, mainly for funds. So the main sort of goal here for me is to invest 20k a year into ETFs purely from my ISA account, which I've been doing on Trading 212. I then have my Vanguard GIA, which is again for just putting money into funds and stuff for long-term retirement. And then I want my dividend income stocks to basically pay for my lifestyle as quick as possible. So the majority of my additional income or extra money goes into the general investing account as well as the ETFs for long-term stuff, okay? So with that being said, let's jump into it. So as you can see, my current portfolio value across the ISAs and my general investing account is $73,604. Now, this is based in dollars. It's about 60-something thousand pounds, right? My goal for this year is to get this to a minimum of 100K, which I think I'm going to hit pretty easily, if I'm being honest. So that is my goal for this year. Okay, now as you can see, we currently have a dividend yield of 4.26% per year, or a yield on cost of 4.51% per year. So the yield on cost essentially means the total annual income from dividends divided by the total average cost per share. So what I paid for the shares is how much dividends I get based on that. That is the dividend yield based on the current price of the stocks, okay? So as you can see, I'm currently pulling away an annual income of $2,611 per year from my portfolio. Now, the majority of this portfolio, bear in mind, does hold weight in my ISA. Okay, so there's not much dividends that comes from the ISA because, again, it's mainly funds, VUSA, Vanguard, S&P 500, and a bunch of other funds, right? So not many dividends from there. The majority of this dividend income comes from my general investing account, which I do only have about 25k in there right now, and that's in pounds. So if we take a look at my annual income, you can see the biggest one is from the S&P 500. That is my largest holding. That gives me $356 a year. Next is realty income, which is $295 a year, which pays monthly, which is nice. The next one is VOOC, or the FTSE 100, which pays me $288 a year. Annually Capital, it pays me $233 a year, which I actually don't have that much money in, which is pretty cool. The dividend yield is massive, though. Okay, VFEM, which is another Vanguard ETF, pays $217 a year. VHYL, $208 a year. Oxford Lane Capital, $207 a year. BHP, $211. Rio Tinto, $184. Horizon, $82. Altria Group, $79. Prospect, $77. Ellington Financial, $72. BCE, $52. Apple Hospitality, $50. LTC Capital, $36. Avgo, $34. Pembina, $31. Unilever, $37. AT&T, $29. BP, $25. Imperial Brands, $26. British American Tobacco, $24. INRG pays $21.26 a year. Stag, $14 for ADC as well. IHGO, $17. Intel, $13. Lloyd's, $13. Shaw, $10. $11, 8, 7, 7, 8, 6, 4, 3, and a whopping 10 cents on this one. Okay, and as you can see, the biggest dividend yield that we do have is 14%, and it goes down to about 0.03%. So pretty wide range here. Okay, now if we go into the general investing account, again, you can kind of see that this holds the majority of the weight in terms of the dividends at a whopping 1,900 a year, or a dividend yield of 6.78%. Okay, and if we go to the ISA, you can see this is the highest portfolio that I have, 43K USD. That pays only $662 because, again, I have got funds in here, right? These are all ETFs. So there's a 2.52% dividend yield, to be fair, on these ETFs, which isn't too bad. So over the years, as I continue adding 20K a year to this, that will add up quite nicely. So if we take a look in terms of 20,000 a year, times that by 2.52%. So that's actually an additional $504 a year in annual income by just depositing the 20K in the ISA every year, which if we times that by 20 years, it's going to be an extra 10K a year in income over the next 20 years, which is what I'm looking to retire. So I'm 21 years old, based in the UK. I want to retire by the time I'm 40, which, again, the way that I'm able to invest in my stock portfolio is I own 2 businesses here in the UK, and I run those full time. So yeah, just keep that, take that as you will, right? So around age 40, I kind of want to retire from my stock portfolio. So let's take a look at my SIP. So my SIP is my pension, which I only have about 1.3K in there right now. And you can see this is how my pension is split up. We've got VUAG, which is the S&P 500. We've got VOOC, we've got VYRL, and we have iShares. What is this stock? I think this is iShares Global Dividend. Yeah, Quality Dividend. Okay. So if we take a look in terms of my annual income for my SIP, which again is very small at the moment, but it's kind of growing every single year, and that's currently held on free trade. However, I do want to move it over to Vanguard. That only pays about $10 a year right now, but we're getting a 3.41% dividend yield on that. Okay. My free trade general investing account, I think there's only like $70 in there, which I just bought some BP stock many years ago. That pays me about $3 a year or something. I'm up massively though on this one, so that's nice. Vanguard ISA doesn't have anything in it. I kind of just set this up because I do want to move over to Vanguard. Probably not next year, but the year after. So in 2024, I will move over to my Vanguard ISA because I'm getting close, or I will be over that 85K FCS protection on Trading 212. So I'm going to move that over to Vanguard. Now, what's cool about the dividend tracker is, again, it tracks your entire portfolio instead of having to go into each brokerage account, which you do have to manually input. Unfortunately for UK stockbrokers, there are some brokerages which will allow you to connect automatically and pull all of your information, but they're mainly US based, and I'm in the UK. So I just update this once a month. I don't know why they said 1.28 million. I mean, I wish at this stage, but yeah. So as you can see, I've put my monthly income goal to $3,000 a month, but I've put my yearly income goal of 50K per year. So about 6% away there to my yearly goal, and about 8% of the way there to my monthly goal. So you can see how much money we'd need for 50K a year. For some people, they don't need to get to 50K a year just on dividends. But that's my goal, and I've got a long enough time horizon to actually get there. And if we're getting a 4.62%, that's about just over 1.2 million, I believe, invested in dividend stocks to get there over the next 20 years. So again, if we pull up my calculator, if we do 1.2 million, take away 70, let's call it 73,600. So we need to invest 1.126 million, divide that by 20 years. So we need to invest on average about 56K a year to get to that 1.2 million goal, which is, again, split between, well, yeah, I mean, that doesn't include compounding or trades or anything like that, or swing trades, which I do sometimes. So it's going to be less than that because of compound interest. But let's go ahead and take a look. So you can actually, the good thing about Dividend Tracker, and there'll be a link in the description if you want to subscribe to this. I think it's like $15 a year or something very low, nothing crazy. But if you go to the calendar, it kind of shows you a payout calendar in terms of what you should be expecting. So you can see my next dividend is going to be on February 14th of $1.20 from Agree Realty. On the 15th, I'm going to get $37 in dividends from these companies here, biggest one being Realty Income. 16th, again, another $6. 24th, another $3. 27th, $6. And on the 28th, we're going to get another $20 there. And you can kind of see the different months you're going to get paid dividends. Some of the days are massive, some of them aren't so big. But again, I'm kind of letting the dividends stack up and basically recompound. So we got a massive dividend pay on the March 23rd of £81 from BHP, which I only have about £1,600 in BHP, but because the dividend yield is so high and because it's been doing so well, obviously that's compounded, which is very nice. On March 24th, again, we got another £94 coming from Rio. We got $140 coming in on the 29th of March, which is going to be from FTSE Emerging Markets, All World High Dividend Yield, FTSE 100, S&P 500, and FTSE All World there. On the 30th, we've got, so we do get a dividend every month from Realty Income, which I don't know why it's not showing. Yeah, here we go, $24.62 a month for Realty Income. So, I mean, yeah, we got some pretty high dividend days, I'm not going to lie. So my yearly dividend forecast, as you can see, in April is only going to be $88. In March, we're going to have a month of $464 for the month of March, which is very nice. April is a bit lower at $100. May is $174. June $275. July $107. August $145. September, another big month of $454. October is lower at $177. November $117. December is $278, and then of course you start from the year again, and you can kind of see the different dividends that come in, and yeah, as you can see, these are the dividends sort of coming from the different companies, which is good to see. As you can see, Ellington Financial pays, it looks like, every month other than June. EPR pays every month. You've got Realty Income, which is my favorite dividend stock, which pays every single month. I'm going to continue adding a lot of money to Realty Income. I want to get Realty Income to be a massive bag for me. And the reason for that is because I want to have most of my retirement paid for in Realty Income. And again, I love diversification, don't get me wrong, and I'll of course diversify. But the reason I want to get a massive amount of money invested in Realty Income is because it's real estate. It's just liquid real estate. You're essentially buying into Realty Income, which owns commercial real estate that then rents that out to companies and then pays, I think it's like 95% or something of their profits every single year out to dividend holders. So you're essentially owning real estate but having access to it whenever you like, and you can sell your real estate whenever you want. So I love that. So Realty Income is going to be a big one for me. Oxford Lane Capital, I mean, this pays out a massive amount of dividends, 14.49%, and you can kind of see over the last kind of year, it has come down, but it's starting to come back up. And as you can see, the chart isn't looking too bad really over the complete term. So dividends, as you can see, let's take a look here. We can kind of see the different growth. Dividend streak has been 6 years. And yeah, that is very, very nice. You can see the financials. You can see the grade. So dividend tracker is not just good for showing your dividends, but it's great to see different company information. Now, what I also like is the calculators. Because you can say, let's say you want to have an annual income of 50K, then we want Realty Income, which is going to be the first one. We're going to want ALY, which is annual, that capital stock. And then we also, let's just say we want, for the third stock, let's say we want Altria, for example, which is MO. Okay. Let's see how much it's going to take to get to $50,000 a year from these three stocks. Let's calculate this. Okay. So we're going to need 489,000 into the following breakdown. Okay. So we're going to need 376K in O and 112K in NLY, which actually isn't too bad. So you're only going to need 489,000 to live off dividends of two stocks. Because I don't know why MO isn't showing it. There we go. Okay, so you need 697K into the three different stocks. But if you just want to go for one, you can. Of course, you wouldn't really want to retire just on one stock. It's a bit risky. But say for something like Rio Tinto and NLY, which are big dividend payers, which again, I know high dividend yield stocks are a bit riskier. but you're only going to need 435k to earn 50k a year in both of these stocks, which is very, very doable. If you think about the long term, I know everyone's in a different financial situation, but it's very doable. I mean, most people don't need 50k honestly to live a good life. Some people would need on dividends just maybe like 20k. You know, by the time you retire, you want to really kind of numb down your lifestyle a bit to retire on 20k. You can do that very easy. I mean, with just these two stocks alone, you're only going to need 174k. Let's see if we want to add in O and we want to add in MO and maybe Coca-Cola, for example. And maybe you want to also add in, let's see what else you could add. Let me pull up my general investing account here and see what else we would potentially add to this. Let's go to here. I know you can't see this, but let's see what else I have on my list that we would potentially look at retiring from. Let's have a look here. Apple Hospitality, that's another REIT. So Apple there, you may look at retiring from that as well. And remember, you're only looking for about 20k a year in this example. So maybe AT&T. Okay. Let's see. You don't really want too many stocks, I don't think anyway. I know my stock portfolio is pretty big. Or in terms of the amount of stocks that I hold. So maybe I'll kind of numb that down a little bit as we go forward. And let's also do a nice Coca-Cola, and then we'll also do Apple to end it off. As a nice kind of diversified portfolio here. Apple. Why isn't Apple coming up? Apple. That's it. There we go. Nope, that's not it. I think it's AAPL, right? I don't know why Apple's not coming. There we go. Apple US. There we go. Okay. Sorry about that. So for 20k per year in annual income, you would need to have invested a grand total of 678k in across these. So if you, let's say you didn't want Apple. Apple is a very low paying dividend stock, right? So you're going to need a massive more into Apple. So if we remove that, then you're going to need 380k to get that 20k a year, which is massive. So not too bad at all, really, in terms of, let's say you want $250,000 a year, you're going to need about 4.7 million. So I like playing around with this. It kind of keeps you grounded with some of your goals for your investing. 1.9 million for 100k a year. So yeah, I know this has been a long video, but I love playing with this and just kind of seeing how much you're going to need to retire off of some stock. So yeah, pretty cool little feature here, and a very, 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 very cool application here, the dividend tracker. So loving it. But guys, thank you for watching. I hope you enjoyed. Subscribe to the channel if you want to, and let me know down below what you change with my portfolio. We can kind of see the difference in terms of where I've got my money. Miscellaneous is 63%. We have consumer, we've got utilities, we've got technology, we've got communication, real estate, energy, financial services, consumer defensive, and basic materials. Okay, so that's kind of my diversification. But yeah, thanks for watching, and I'll see you in the next video. Peace.